And we are live with our 50th installment of Nansen Office Hours, GM. And thank you for joining us today. Feel free to drop your GMs in the chat. My name is Alex. I'm the co-founder and CEO at Nansen. I'm also sometimes referred to as the token god. If you are new to our office hours, every Wednesday we do a Nansen and chill session where we look at Nansen's new features or maybe some tips and tricks on how to use Nansen. We also answer questions from you, so feel free to drop them in the chat, and I'll try to keep an eye on the chat. And we also drop the occasional alpha leak. Today, we have a very special guest with us, namely Nansen's very first customer, Joel John. Welcome, Joel.
Thanks, Alex. Thanks for having me on.
Our pleasure. So maybe we can start by having you give a quick introduction of yourself.
Sure. So my name is Joel. I work at Ledger Prime as the venture lead. Ledger Prime itself is a multi-strat fund with an active hedge fund, market making division, and a venture fund division. I handle much of our venture investing. My background has been mostly on the venture side. Prior to Ledger Prime, I was with Outlier Ventures, which was Europe's first blockchain-specific venture fund. And even prior to that, I was working on blockchain-based financial inclusion. So spent time between 2013 to 2016 researching how to make that happen in Southeast Asia. So that's the background. Most of my work has been on research and being fascinated by on-chain economics as a concept. I think that's where I stumbled across Nansen because it lets you see how changing certain economic variables changes behavior at a chain level, and it also visualizes it for you. But yeah, we can dig into that in a bit. But short introduction. Mostly a numbers guy, love venture, and have been a huge fan of Nansen since the beginning. Yeah.
Yeah, literally since the beginning, which is great. So yeah, I'm kind of curious, like what kind of stuff do you use Nansen for? Many of our customers at this point use it to, discover new NFT opportunities or perform due diligence on specific tokens, to get alerts when important events take place on the blockchain. As more of an analyst persona, not someone who's necessarily aping into NFT collections all day. What are some of the use cases or sort of problems that you've solved using Nansen?
So I see Nansen to be somewhat similar to a Swiss knife in the sense that it can be very different things at different points in time. Like I said, the first thing that Nansen really lets me do is it lets me have a macro view of what's going on chain, right? So let's say there's a token that I'm interested in. I just drop in the smart contract address, and it lets me know who are the biggest holders, what's the average size of a transaction, how long have tokens been held. So it gives you the macro view. The way I see it is I'm looking if I compare each protocol to be a nation state, each token is like a state within that nation. So you're basically trying to figure out, do I want to spend time on this? And what Nansen lets you do is visualize the state level GDP more or less, right? So if the numbers don't make sense at that point in time, I just drop it right then and there. Because if somebody's owning a large chunk of the assets, if there's evidence of on-chain pump and dump, if it seems like there is no exchange listings in the works, all of that just comes off as red flag. So then it acts as the first filter for me in terms of whether I want to spend time on a project or not. The second way I use it is to get a macro view on the industry as a whole. So I've published the state of stablecoin reports almost, I think, 5 or 6 times now. And what it really lets me do is get a gauge on what's the retail interest in the market like. Are whales really moving stablecoins in large sums? Which stablecoins are being used, and what does that really tell me about the industry, right? So during DeFi summer, you could very clearly see that DAI usage was going up substantially. Or more recently, you can see that stablecoins on Ethereum typically tends to be of a much higher size versus something like Solana or USDC, or BSC. Now, some of these data sets are accessible on Nansen, so I just use Nansen to get a gauge on the macro environment. And the third is usually when there's a new token live and nobody knows what's really going on. So good example is ENS. I was tracking the token when it was at about $28. It was barely listed on an exchange. But if you had used Nansen, you could see who's buying, who's selling, which are the exchanges that's considering listing ENS. So there was substantial alpha there. And I wouldn't call it aping. It's basically studying the chain, right? Aping is if I saw a $70,000 APY farm and I went in. Uh, so I think in that case, there is a certain amount of discipline. I wouldn't say it's the most disciplined thing to do, but there's also quick availability of data that helps you make decisions much faster. So long story short, one is it acts as the initial filter for me or as to whether I want to spend time on a project or not. Second is it lets me have a macro view. And the third is, the network, the project level on-chain behavior, right? Now, if I'm way too fascinated, here's what I do additionally. There's the smart contract feature on Nansen, right? So almost every few days, I go to Nansen. I basically just refresh all the smart contracts. I see who's engaging the most, which smart contracts are attracting the most capital. Now, in those cases, I don't ape myself because I'm relatively conservative as an investor, but it helps me stay on top of what's really going on in the industry because uh, the way the news cycles work in the industry, by the time it's in the news cycle, it's too late. You need to look at what's going on chain to understand where is alpha. And I'll give you a good example of how the market is likely mispricing things in a bit. So checking the hot smart contracts bit is one. And the other is, I think, quite recently you released the NFT dashboard, right? Uh, I use it more as a gauge to understand, again, what's the macro trends within NFTs. So if you saw a few months back, it was Bored Apes and CryptoPunks that was dominating the dashboard. Now it's more a retail-oriented NFTs like the one by Gary Vee. So you can see how some of these trends emerge again on-chain. And in the traditional financial world, they say trust the numbers, right? Here, it's more like trust what's happening on chain because everything else is nonsense, uh, which rhymes with Nansen anyway. But yeah, that's how I put it.
Yeah, nice. That's super interesting. I like the perspective of kind of using Nansen for more macro things, which is not really something we've looked at before in the office hours. So maybe I can just go ahead and share my screen and we can like look at some of these things that you find interesting in the Nansen dashboards. In fact, let me just take 1 second to open a separate window so I can also look at the chat if I need to. Let's see, sharing my screen here. Let's see. You can see my screen on your end now, right?
Yes, I can.
Okay, excellent. So let me see. I will put this here to the side and let me see if I can expand it a bit so we have a bit more text. Is that okay still in terms of resolution?
All
You
good,
think?
all good. Yep.
Okay, cool. So yeah, where to start? I mean, we talked about a few different things before jumping on air here. I mean, like Ronin or Axie, is that something? I know that you've been studying that. Should we start there?
Yeah, we can definitely start there. I can give you one instance uh, of a macro trade that I did myself, where
Mm.
Nansen could have said, okay, maybe that's a bad trade. So let's just open Ronin right now.
All right. So looking at Ronin under multi-chain, right?
Yeah. All right. Let's
Cool.
scroll down. Let's go straight to the
Scroll
SLP
down.
dashboard.
Mm-hmm. The mints and burns, this one here, or?
Yes, the mints and burns,
Mm-hmm.
right? So,
Mm.
uh, yeah, one feature request I need to make on the platform is to be able to expand the graphs. But okay, so do
Mm.
you see the big spike around November? Right, that's the one.
4th of November, this one, yeah.
Yes. All right, now, so you can see that there was 1.2 billion SLP that was minted, and if you go further lower, you can also see that the SLP came to ETH. So what happened on
Mm.
that day
Mm.
was that again, this is not FUDing axes. It's just something I noticed. All right, what happened on
Yeah.
that day is the 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 Ronin chain announcement was made. There was a massive amount of interest in Axie. Axie was at 143. It went all the way up to 156. I had a long on SLP. This was my personal account, and I thought, okay, you know what? SLP has massive utility now. It should be going up. And I did not actually look at what's really going on chain. And what
Mm,
happened since then, if you notice, SLP actually went from 0.085 to I believe it's at around zero point zero 0.06 now. And the
mm,
reason for that is because there was massive interest in Axie all of a sudden. People were minting SLP because there were a lot more people, using Axie at that point in time. More SLP was issued, and that came on chain to ETH. And if you actually track SLP smart contract, you can likely see who sold it to. But my point is, as a trader, if I was actually vigilant or if I had set alerts for this, I would have seen that there's a massive chunk of SLP that came from to ETH, which was eventually sold, and that was
yeah.
like literal a red flag that should have been just there, but I didn't notice it, right? Uh, I'm happy explaining cases where I wasn't vigilant and I lost money.
Yeah, I mean,
Than yeah,
it's pretty good because it's kind of like a post-mortem. Like, how could this trade have been made better? And you're
yeah.
basically saying that if you had been more vigilant looking at the on-chain data, you would have spotted this, and you probably would have taken a different course of action.
Absolutely, absolutely. Now, here's the cool thing. If you look at the data freshness here, right? It's roughly about 2 minutes that
Mm,
it updates. I think most of your data sets are roughly in that range, and
mm,
that is really helpful because if you can't find it in a matter of minutes, you will have issues. If this data set was being updated on an hourly basis, it's not good data for trading.
mm,
But what I like about Nansen is that you actually index and update this data every few minutes or so, which again makes it quite useful because if you went all the way up to millisecond latency in terms of updating data, the product would be a lot more costlier, and that would exclude the vast majority of users. But if you
yeah,
kept it at hourly updates, it would be again useless for the vast majority of users. So it's just something that I find
yeah. This is
interesting
kind of
about.
like a sweet spot there. Right? Yeah,
Ab-
that's true.
Absolutely,
Uh,
absolutely.
and did you also look at the like Axie Infinity dashboard as well when studying this stuff,
Yes,
or were you most looking at
I
Ronin?
did. I did.
Mm,
So this is where I'm bullish on Axie Infinity, right? I
mm,
feel the market is likely discounting Axie Infinity as a chain because if you look at their total active addresses, it spikes between
mm-hmm,
600K and 1 million. Now, I don't know why that happens, right? So I think you have an active address graph for
mm.
Ronin chain.
Yeah, if I go back to Ronin here, let's
Yes.
see. Probably there is, yeah, this
There
guy
you
here,
go.
right? Yeah,
Right. So it
yeah.
keeps spiking between 1 million and 600,000 now. I need to figure out why that
Mm.
happens, likely something to do with the product. Um,
Yeah,
but
it
my
could. I
assumption,
mean,
yeah,
sorry, it could be. I'm not 100% sure, but it could be that some of these things are scheduled with regards to like staking or releasing funds, or I guess a lot of this stuff has become somewhat industrialized, right?
mm,
So there might be some kind of like working schedule of either bots or guilds or whatever it is, right?
yep. So I think look, let me summarize it like this. You have a chain with best case scenario, a million active users. How do you value it? There are some ways to benchmark it, and I do think as Ronin chain comes closer to being live, uh, people would likely start repricing what Ronin tokens should be worth. So my bet is that it's likely going to be a multi-billion-dollar chain at launch. That's my
Mm,
personal thesis. So
mm.
everything I say is my personal thesis. It's nothing to do with
Yeah,
any of the
no investment advice
organization I'm
or
involved with,
yeah,
right?
yeah, yeah.
My understanding is that Ronin could likely be somewhat similar to what Flow is for NFTs, in the sense that
Mm,
they have a captive user base, they have a captive, what do you say, ecosystem, and now they have a chain of their own. It would be very interesting to see how Ronin goes from Axie Infinity, the game, to Ronin, the ecosystem, right? Like that would be fascinating. I
yes.
think that's where this whole dashboard is of use if you take a year-long view. And because I know Jiho and Sky Mavis as a firm, like I spoke to them roughly around the same time I spoke to you last year. I've
Mm,
learned not to bet against them, right? Like some founders you don't bet against. So as much as
mm,
there
yeah.
is some FUD in the market, I feel like seeing Ronin grow to be an ecosystem would be quite fascinating.
Yeah, I'm one thing I've been waiting for is to see like the second game on Ronin. Like, what's going to be the second game on Ronin? Because obviously now it's kind of like a mono game chain or mono application chain. And it seems like such a big opportunity for another game to just tap into the existing ecosystem of players that are on Ronin, that like they have a wallet, they have funds, they're already, it seems like a no-brainer to be the second game on Ronin. And I feel like many of these blockchain-based games are taking different avenues. They're kind of launching on like Ethereum or Solana, which, you know, maybe it's not a bad idea. There are, of course, obviously massive network effects on other chains too. But I'm a bit surprised there hasn't been like more games actively pursuing to become like the next game on Ronin, because like that's where you have so much of these players already, and like the guilds and all these guys are already set up to be working with Ronin. So I don't know if it's just because maybe the Sky Mavis guys want to make the second game themselves, or you know what, but it seems like a big opportunity to be the second game on Ronin.
So I think it's you can look at it in two lens. One is Sky Mavis does not want multiple games without uh, user bases scaling, and I'll tell you why.
Mm,
Uh, if you have 1 million users and they're divided across 5 different games, uh, the monetary velocity, the number of times an asset is traded, basically tends to decline, right? Like you want all the players concentrated in a single game, constantly trading against one another, because that's when liquidity is higher. That's when economic activity is higher, right? It's like uh, composability in DeFi, in the sense that if you see Aave, Compound, and all those applications, they tend to work between themselves on ETH, but the moment you have liquidity divided between Avalanche, FTM, and Solana, it does
mm,
not become as compelling a narrative. So Sky Mavis may want to release new games only after they're confident that gamers would the number of gamers would increase in tandem, or else you basically divide the ecosystem. The other is I wouldn't be surprised if Sky Mavis has already been angel investing and supporting a number of game developers with the
yeah.
idea of launching on Ronin whenever it is live, right? Like, why are they doing all this? They need to help build Ronin at the end of the day. So maybe they do have a strong filtering process because uh, what do you say? They're already in touch with Ubisoft, if I'm not wrong. They're already in touch with Animoca brands.
Yeah.
So
Yeah.
it's likely that they incubate, but they're very picky about which game developers they work with. And I think all of it plugs into the last bit, is that play to earn ecosystems are not just about games. They are also about how you design and develop the financial ecosystem within it. That's why, what do you say? You don't see many players emerging to where Axie is, right? Like if you draw Power Law, Axie Infinity is in a world of its own in terms of user behavior, and everybody else is in distant second. So I think that's also something I would say they did right. They took 2.5 years to really perfect that as
Yeah.
a way to do things. Yeah.
Just to sort of echo that point, I mean, if you look at NFT Paradise, it is true that pretty much all the time Axie is throning here as number one in terms of traded volume. Recently, there's been a bit of an increase on Sandbox actually. So maybe that's a segue we could make into that, because I know you've also been looking at Sandbox yourself. Um, so just to briefly comment on what we see in the actual dashboard here in NFT God mode, when we click through on land from Sandbox, you can see there's been a big increase in volume over the last like 2 weeks. It looks like average prices have been going up. Also, the max price there at the top end of the scale. And not sure why there's 0 transactions in this window. That seems odd to me. Probably some kind of data quality issue, which we should report back. Unless there was some kind of freeze on on the trading, which seems a bit weird.
Yeah.
There are a few notable buyers in here as well, like Smeet.eth, GM.eth, jbooz.eth as well. And then you can actually see some things here. For example, the unique addresses has pretty much like been going up steadily since January 2020. So this, or sorry, yeah, December 2019 actually. this is more like an OG project in the NFT world. But so that you can see already some interesting stats here around the land token. But have you been looking at Sandbox and like what's your take on it?
Yeah, so I think Sandbox is interesting because it fits within the broader metaverse theme, right? So right when Facebook launched or mentioned its plan to become a metaverse firm, you could literally invest in an index of metaverse related tokens and you would have been just fine. And I think that's what I really like about crypto as an asset class. Is as speculative as it is in some corners, it's also a very rational market where assets are constantly being repriced on basis of the macro environment. Now, coming back to Sandbox, when I was looking at this project, I think what you have is the hodler's dashboard. What what stood out for me really is and this the unique address chart, right? So what I've seen is if I is every network has this certain point in time where having a certain amount of unique addresses engaging with it helps it reach a certain velocity that helps it maintain both price and interest from the market. So whenever something reaches around, let's say, $8,000 to $10,000, sorry, 8 to 10,000 active addresses, I tend to at
Mm,
least mentally reprice the token because that has been the inflection point for me. So you will see a lot of billion-dollar protocols with maybe 2,000 active addresses, and that's the immediate red flag for me. I tend to just pass it at that point.
mm,
But if I see something north of 10,000, I know that it's quite interesting because it has community buy-in and that is verifiable on chain, right? So I know I'm not talking about Sandbox in particular here, but just so that your users know how to actually gauge
mm,
whether a network has users, right? You go to Discord, you can see like 12,000, 20,000 users. Those could be bots. Definitely, you can check an
mm,
engagement, but that can also be farmed because sometimes some projects give airdrops for farming for engagement. You can go to Twitter, you'll see that these projects have 20,000 followers, but that's again, it's still bots or farms. But if you go on unique addresses, this chart for most projects, you can immediately get a gauge of whether it's a good token or not, depending on how many active addresses you see over a period of time. So one good example I have for this is I'm just pulling up the chart myself here for
mm.
ENS, right?
Right. Yeah.
If you
Let
just
me.
open it up,
Yeah.
you can
So
see.
to do for those of you who are not as familiar with Nansen, so we would go back to the homepage. You can click on Token God Mode here in the quick access bar. So I would simply type in ENS as the token, not Dgens, but ENS, and then click Show Summary. And I think you probably wanted to look at hodlers here, right? This one here, perhaps, or?
Yep, yes.
Yeah, this is a pretty extreme example where we've gone
It
from
is.
like a few smart contracts probably that were holding the addresses, and then the airdrop took place, right? And it spiked straight up to like 50,000 over like 48 hours.
Indeed. Now, I mean, I'm not saying every project should launch with 55,000 hodlers. I think ENS
Mm,
is an exception because they're a brand that's been around for 2.5 years. Most of the people see them as a foundational primitive for what Web3 would be like. But if you see what's interesting about this chart is if a lot of people that got the airdrops were dumping, the number would have likely started reducing, right? Like it would have gone from let's say 50,000 to 48,000, 47,000.
mm,
That's when you
mm,
know people are actually exiting it. What this chart showed me when I was spending time on it is that people are not exiting. And then
mm,
that kind of made me realize, okay, there's 50,000 people with buy-in into this asset that are not exiting after they received roughly $10,000 for free. And that made me quite bullish on ENS when I was actually initially looking at it. So quick word of what do you say? It's just this general thing that I've seen is for every token you can just go check how many unique addresses hold the asset. If it's a billion-dollar protocol with less than 1,000 unique addresses, maybe you may be in for a rough ride. I'm not saying it's always the case, but
mm.
it's been what I've seen. And if it does have tens of thousands of people, then you have a community, an on-chain verifiable community, and I think that's very useful. I think one
Yeah.
case again, where you can see this growing gradually is if you check the Wi-Fi chart for hodlers.
Yeah,
So let's just pull
yeah.
up
Let's.
Wi-Fi here.
Yeah, I want to save that because I wanted to just dive into something else afterwards. But if we look
Yeah.
at, let's see if there's a. Well, I'll just go to token god mode and Wi-Fi. Let's see
So you can
here.
actually see DeFi seasonality uh, in this chart. It's quite so you can see how the charts have actually gone down, and then people
Mm.
buy back in. And this is actually it's likely one of the most organic charts in DeFi that I've seen, where over a period of time it's stably growing, and you can see that
Yeah,
initial spike from 0 to 5K,
yeah,
and then you can see that from 5K to 10K. But after that, it's been more or less on a steady growth rate on a daily
yeah.
basis.
Man,
Uh,
yeah. I remember these. I guess this week or yeah, of
yeah,
farming
but
it. Those were the days. Yeah.
yeah, from a trading perspective, you ideally want to see those spikes up. That's why I pulled up ENS
Mm.
because it went from 0 to 50K, because
Yeah.
that's the high volatility days. But if you want something that's more indexed, uh, the organic growth pattern is what you want. Which I'll
Yeah.
wrap this up in a bit. If you go back to Sandbox now,
Mm-hmm.
uh, and you see that chart, you can see what I mean. It's been a very stable organic
Mm.
growth pattern. It's not one immediate spike, which makes me
Yeah.
quite impressed about them because they've had that very stable growth that's compounded over a period of time versus immediate spikes. So depending on
I
what you're going for, you
yeah.
want a different chart in terms of the asset you're looking at. If you're
Yeah.
speculating on
I love this.
volatility, go for the
Sorry, I was just
spike.
gonna say, like, I love this perspective that you bring, where you can sort of do a bit of comparative analysis, right? Where you can kind of look at the same charts and build up this kind of intuition, like what should a good chart look like? What does an organic chart look like? And you can compare it with the different tokens, the different NFT collections to get a sense of how it should be.
Absolutely. I think, I mean, I think crypto is a asset class that lets you trade with very different philosophies at different point in time. There are some projects you have to treat as a venture investment. Just forget about it. You can't. I mean, you can trade in and out, but maybe the end result would likely be better off if you just hold it. But there are some
Mm,
assets where you have to practice liquidity, where the volatility is so high, it doesn't make sense for you to not practice it. So
mm,
ENS, good example, was started at 28, went all the way to 83, 89. Uh, you have to practice the liquidity if you want to trade it. Now it's at 46, and I think it's been stable around the 40s range for quite some time.
mm.
Uh, so what I tend to do is I have in my personal account, I basically have a large chunk that goes into my angel investing and all of that. And I have an asset that basically says, okay, this is for volatility, right? So I expect it to have a higher Sharpe ratio, higher ups and downs, just to ride on the market. Like that's how I think about it.
Yeah. So I wanted to pick up on one thing you said about the number of addresses, because this is a good time to mention that you can actually find ENS as an NFT collection now in NFT Paradise. For a while, you couldn't, because it turns out is actually not a very standard. I'm going to add this to my watch list. It's not a very standard NFT collection because it predates perhaps the ERC 721. So we had to
Mhm.
do some like manual adjustments to get the data in, but now you can actually find it here, and we can actually look at the number of addresses that have ENS tokens, right? Not the ENS tokens, but the .eth names, NFTs. And this too is quite astonishing. Like if you look back, there's been some changes to the addresses. So there was like a migration from an old contract to a new one, which I think is the spike you see straight here. But it's quite remarkable, like the sort of hockey stick growth of number of addresses that own .eth names. Which is pretty cool. And it plays right into that thesis that you were talking about. You want to see the sustained sort of organic growth over time. You don't want to see just like one inorganic spike necessarily.
Absolutely. So I think what I really want to drive here, I think, is the fact that a lot of people think that crypto is speculatory, that it's just people buying into random NFTs and assets. But there is an entire science behind the whole thing. And tools like Nansen really helps visualize all of it in a single dashboard, right? I hope at some point the regulator really comes in and uses Nansen to see what's actually going on, because it's just not people pumping and dumping assets. You can see projects that have grown with very steady growth curves. And yeah, that's just one of the things
Yeah,
I want to point.
yeah. No, that's really great. So wanted to also, just since we were talking about Sandbox and land, so this is like the land NFTs, but Sandbox also has an ERC20 token, right? Which is called Sand, I believe. So I wanted to see if there's been kind of traction on this one as well. And yes, it looks like like it has. Since October, where it was priced at below $1, it's pumped to like above $6 now. Looks like it's on its way to $7 here, which is pretty wild. So curious if we might see something here with regards to like what's driving this activity. And if I go to notable wallets and I can look at the top accumulating wallets, you see a Gemini deposit wallet. So I don't know, maybe there's some kind of Gemini listing or something recently, or someone just depositing a lot of funds there. BitCub, which is a Thai exchange, I believe.
Mm-hmm.
Looks like there's been quite a lot of inflow of SAN tokens there as well. There's been outflow from Gemini too, though, from a different account. You see mostly the large transactions have been like between exchange wallets, which could reflect the high volatility. So they need to sort of restock the different addresses when people are withdrawing and depositing. And then we can look at the exchange view here, where you can see indeed like Gemini is the second largest exchange holding SAN tokens. Binance is by far the largest one. I think maybe they did an IEO on Binance back in the day, if I recall correctly. I don't know if you remember. Yeah. Yeah, and then you see KuCoin and so on. So yeah, look, I don't know. Do you have any thoughts on the SAN token, like, or how would you go about sort of analyzing this or trying to get an informed opinion on what's happening with the SAN token?
So, quick caveat, right? This is fully speculatory. This is likely a prime brokerage that's likely acquiring the asset and custodying at Gemini. So usually in a case like this,
Mm,
uh, it's likely somebody that just bought in, tens of millions of dollars worth of SAN tokens, and is just custodying it through Gemini's service, right? Like that's why you see inbound, outbound, and there's some balance left. So yeah,
so
that's
this is an extremely good point, right? Because you need to also understand a bit about like the industry and the real world when you look at on-chain data, right? You can't just say, oh, this is. Sometimes I see people interpreting on-chain data in a very literal way, to the point where they will say, hey, Binance is buying this token. And in fact, of course, Binance doesn't buy the token. It's just users depositing funds into Binance. But
right.
here you're saying, of course, you don't know for a fact, but you know that, prime brokerages will use Gemini very often. And because of the amounts that you see here, you think it's likely it could be prime brokerage simply acquiring, or like an OTC deal or something like that.
It
So
could be.
yeah,
I'm,
I
I'm, I'm
really like that.
speculating
Yeah,
entirely. There's no science to it,
sure. Yeah,
but that's generally what I've seen with some of these large transactions, right? I think
but
it,
I
it,
think,
it makes
yeah,
sense
go ahead.
if you are investing as a fundamental investor. Metaverse as a theme has really taken off. So if you take, let's say, decentralized tokens right now, you'll likely see some very similar large transactions. And what I would say is all of those are prime brokers acquiring tokens for very large buyers. And one good instance I have of this, and this is likely how I think it could give you color as to how institutions do this, is I saw there was a tweet saying that there was $100 million Solana transaction when it was at around 140, and now it's roughly about 230, right? So let's say you are a large institution that's come in with that kind of size. You've already done a multiple of what many small venture funds would do in their lifetime because of the
Yeah,
amount, the size that you came in, right? And so I think one of the underappreciated players in the market right now are these big size checks that come in into relatively growth stage tokens and buy it in large chunks and then gradually liquidate in a sophisticated fashion. Uh, so these are folks with deep pockets that also understand crypto, and they definitely can drive markets in a very positive way. because you historically, when somebody from the team or somebody from with a large holding wanted to exit, there usually never used to be enough liquidity. Now there is.
Mm,
So I feel that's one thing that's distinctly different in this market cycle versus the 2017 market cycle, and that's why you don't see those 40%, 80% drawdowns anymore, right? Like at least in the top 50, top 30 tokens, more or less.
so just to check if I'm understanding what you're saying. So effectively, you said that there's a big player with lots of capital at their disposal. They will come in and buy a specific token in blocks, like a big chunk of that token, at probably some discount, OTC from someone, and they will effectively turn around and sort of not overnight, but basically sell those tokens with a profit on the market, but in a managed way. Is that what you're saying, or?
Yeah, it's definitely not single players. I've seen at least 4 or 5 funds that are, not really trending on Twitter. They're core crypto folks that understand what they're doing, with
Yeah.
very deep pockets, that buy on spot. Again, not they don't even engage with the team. They literally just buy on spot, and
Mm,
through prime brokers and the like, they hold it, and it's just like the traditional world where you have private players coming in and buying. The difference is these guys are able to do it out of any corners in the world, right? Like earlier, you rarely used to see people buying $100 million of an altcoin. Like for Bitcoin,
mm,
ETH, it was normal. For altcoins, it wasn't. So now that's happened, and I think that really shows how the industry is maturing, right? Uh,
mm,
I think extrapolating on that, I wouldn't be surprised to see billion-dollar single LPs running funds going forward. So right now you have the three ACs, you have multi-billion-dollar funds across. Like there's at least 10, 15 multi-billion-dollar funds, but none of them are single LP led just yet. Like there are few, but they stay very much under the radar. But just like you had single LP $100 million plus VC funds, there will likely be single LP led billion-dollar token funds within the next 3 years. That's also something to
to
look at.
to those out there who aren't that familiar with the venture world and even institutional funds, like, can you explain the difference? Like, what is a single LP fund versus something else?
Sure. So I think, man, most of your audience is likely already a single LP fund in the sense that they're already handling $100,000 to, let's say, a couple million on their own. All right. So
Mm,
I think the difference is you keep the vast majority, not vast majority, you keep all of the profits to yourself. But operationally, there's also a difference in the sense that you're making the decision yourself. You tend to move much faster. You tend to have direct contact with the founders involved. It's more personal. And in the traditional world, there's this guy called Elad Gil. I think he runs a $600 million venture fund. Again, the difference is single LP funds tend to move faster, be more personal, and have less operational bloat. For
mm,
the operator running it, the upside is that they're keeping 100% of the profits to themselves.
mm,
That's one of the biggest things. I think in the token world right now, what you have, and I think this also feeds into what I would say the animosity that's increasingly coming against VC funds is that uh, you have firms right now where there are operators that are definitely bringing value to the startup that's involved. But again, it's split across a large organization, right? But what if firms could directly just work with a single person? That's why you have the rise of angels happening. But angels don't have deep pockets just yet. So what I'm proposing is that within the next 3 years, you'll likely see a multi-billion-dollar single LP token-based fund. And I'm already seeing this. I know at least two people that are handling billion-dollar AUMs, not publicly. They're very private angels, and I think sooner or later that trend will likely become quite more predominant.
mm, mm. That is fascinating because, yeah, I mean, to go back to the earlier point, one thing is the on-chain data. The other thing is like what's happening in the real world, to understand the crypto industry, to understand the players behind all these transactions that we see on chain. So, what do you think? I mean, you obviously you worked, in the industry. You've worked in a VC fund. You're now at Ledger Prime. So, what do you think is a good way for people to learn more about what happens in the more institutional part of crypto if they're not necessarily working at a fund or a prime broker or an OTC desk?
So I think a lot of publications have been doing real justice to what's really going on in the industry. So, massive shout out to the block. Uh, I learn about what's going on the institutional side just reading them. I think they have
Mm.
two subscription tiers. The lower one is definitely worth investing into for retail folks. Delphi Digital is definitely worth subscribing to, right? You don't really get the ins and outs, but you do get a broad view. I think if you want to have a more traditional lens of what's going on, there's trends.vc. There's this guy called Drew Riley on Twitter. I think he also runs trends. There's The Hustle, and I believe it's called The Information. I'm not wrong. But these are some publications that are definitely worth following. I think the most alpha thing that I've seen come to me is just signing up for Substack, following every VC I know, and then seeing who of them has a Substack. And Substack lets you read all of the newsletters on the platform. So you can just go to Substack every weekend and you can see all of their writing, right? So some of it may be trash, some of it may have good alpha, but it's a good way of getting in touch with all the content and macro trends that's going on. But ultimately, I feel everybody that works in an institution, including myself, uh, sees I don't want to say the threat, the opportunity that comes with working in a more open organizational structure. So as part of
Mm.
my research, I constantly respond to people on Twitter. I sponsor research. I pay for data sets all the time. And that's because I believe empowering people to do research and contribute to what a firm does will let you do better as a firm, right? So uh, for instance, when Metaverse was taking off, I didn't have enough coverage on Metaverse. So what I did is I found analysts and I said, listen, tell me the data sets that you need. I will arrange for it. Share it with me, and we can find a way to work together. And that's practically what I did. And so if you're trying to break into the industry, there's two things you can do: literally cold DM some folks with an existing data set, explain why it's interesting and why they should give you their attention, and they would definitely get back to you because everybody is constantly worried about being disrupted. It's an industry that's constantly disrupting itself. The second
Mm.
thing you can do is work at a startup. It's a very if I were to restart my career right now, I would definitely be working at a startup because that's when you get to see the
Nansen?
whole. Absolutely, yeah,
Yeah.
I would, but I would say Nansen has now grown to a point where I don't want to call it a startup. It's a very professional firm with 60 people. I
Well,
don't, right?
yeah, I mean, yeah, you should see our office here. It's a bit of a mess. Feels like a startup. But
That's
yeah,
your office being messy. But what I mean is when it's just three people, scrappy energy, when it's the CEO doing customer support, that's really when you want to join a startup, right?
yeah,
Like because
yeah.
you learn so much at that point in time. Uh, I mean, I feel because I know Nansen has an HR division, my benchmark is always when the firm has an HR division bounce.
Actually, it's funny you mentioned that because we did actually sign the first HR person last week, but they haven't
All
joined
right.
yet. And then we do have an interim HR person working with us.
All
So
right.
yeah,
Look,
but I think that's a good benchmark. I like it. Yeah,
yeah, like don't get me wrong. I feel every organization should have HR people. They people should be
yeah,
taken care of. Don't get me wrong.
yeah, yeah,
But I do feel that that signals that the organization has reached a certain size, right?
yeah. That's
And
true.
yeah, that's how I would say. So cold DM people with active not alpha, right? Like just say, hey, I saw these trends. Would you be willing to get on a call with me for 15 minutes and discuss it? There's
Mm,
practically very few people that I know that would say no. Like what I've also seen is further up the career graph that they are in. Like I know partners who respond in 5 minutes, but sometimes analysts would be like, you know what, I don't want to respond to this. So sometimes you may want to just respond, just write to the big guy at the firm. And there's a reason for that. Analysts usually work on a fixed pay, whereas partners own the firm. So they would always be like, these are my work hours, my boss. But
yeah,
my point
that's
is,
clever. Yeah,
my point is just don't be scared to reach out to people. There's always people that are willing to help. Uh,
yeah.
if they can't help, they'll tell you that, or this is not going to happen right now.
Yeah, there's a lot of magic that happens in Twitter DMs. To be honest, I've experienced that in my career as well. Both like sending DMs and receiving DMs. Lately, I've been falling a bit behind, but I think that's great advice. I wanted to touch on a few more things because we're actually running close to the 1 hour here. Wanted to look at stable coins because you have written a lot about stable coins, and
Indeed.
we have a dashboard called Stablecoin Master. So I was thinking, first of all, what's your interest in stablecoins? Like, why do you think it's important, and what are some of the findings that have been valuable to you using Nansen to investigate stablecoins?
Sure. So I think stablecoins are fascinating for me because I feel them as the primitive that will disrupt finance as a whole. And the reason for that is because it brings stable value assets that can move globally as fast as email, right? Like the promise with Bitcoin was that Bitcoin would do to money what email did to letters, right?
Mm.
But I was trying to build a remittance firm on Bitcoin in 2013, and I could see that volatility, on-chain fees, regulations, none of it's going to really enable a large-scale remittance entity to be built on Bitcoin. So when stablecoins came along, it became very clear to me that this is going to be the one thing that expands the market as a whole. So that's partly what led my obsession to stablecoins. The other is uh, because it's a relatively non-speculatory asset, you can see very retail behavior on stablecoins, right? Like in the sense that if I pull up an RV or a compound chain, you would likely have people whose cost bases were much lower and are now millionaires. So I don't know what they really behave like. But for
Mm.
stablecoins, most people pay more or less the same amount. So you can actually see how everybody is really behaving, right? So usually what I do with the stablecoin master is I definitely look at net exchange inflow and outflow.
Mm.
Inflow typically points to periods of strength, and outflow obviously tends to point to periods of weaknesses, right? Like that's how I thematically or mentally at least gauge it. But
Yeah.
can you go lower? I think there's this.
Yes. There's this one. There's also different tabs here. So we have notable
Oh
wallets,
yes, yes. I
right?
think
And
so.
you have,
Can,
yeah,
can you pull up volume?
yeah.
Yeah,
There
the
we
next
go.
tab.
This one
Yes.
here, right?
So a little lower, a little lower.
There we
So I
go. There's
think
also.
these four
Mm-hmm.
charts are likely the most alpha charts in Nansen from a stablecoin perspective.
Mm.
And I'll tell you what, if you look at the different subsections for stablecoins, so I look at up to 1,000, I look at 1,000 to 10,000, and I tend to look at 100K to 1 million. You can actually
Mm.
see how retail behavior on chain has been, right? So can you go to value distribution of volume for 1K plus?
Yeah, let's see. One, like, basically it would be these guys, right? These are all
Yes,
1K plus. Yeah.
yes.
So everything
So
that's here or low is it's almost non-existent at this point in terms of
those
volume below 1K.
users,
Yeah.
those users, my hypothesis have fled to Binance or Solana right now. So once
Yeah,
you
probably.
index for Binance Smart Chain and Solana, these three charts would look very, very different. So when I
Yes.
started seeing a dip for the smaller category is when I kind of figured, okay, now it's going to be, uh, you know, uh, a new chain season, right? Like if you go for
Mm.
sub 1K transactions, you can actually and if you correlated it with a Binance Smart chain or a Solana chain, you can actually see how the price has increased there while these subcategories have massively declined because that's user migration out of ETH. Now I'm
Yeah,
not saying ETH is bad or good. I'm just saying, look, this is what the
sure.
numbers say, right? But at the same time,
Yeah.
if you pull up the large transaction, let's go 1 million plus, you can see that they are actually increasingly taking a larger share of the
Mm.
the whole market, right? Like it starts off with a very small amount in 1819, but now it's close to 60% if I'm not mistaken. And what that indicates to me is that as much as speed and cost is great on Solana and Avalanche and all those other chains, from a security point of view for large transactions, ETH is still where final settlements happen among whales. And it would
Mm.
be interesting to see how this compares with Solana and BSC when you have that data indexed. But this is still something that makes me quite bullish on ETH from a security standpoint, right?
Yeah, I would love to, when we have the data ready for Solana, um, I mean, we already have this data for a few of the other layer twos, I think. So we should sync up offline on that so that we can
All
get to
right.
the data for reports.
Oh,
The Solana stuff is still in the works. We have the raw Solana data, which is queryable. We don't have, as far as I know, like tokens, including stablecoins yet. But I think you're spot on. Like, it makes sense as well. Like if you're paying, I don't know, $20 to make a transaction, you're gonna do a lot less small transactions, right, on that chain, and you just go elsewhere instead. But
absolutely.
the
Absolutely.
security promises of Ethereum are still basically you know there's no other chain besides Bitcoin where you don't really have stablecoins at all, where you can get the same security as you can with Ethereum, right? So that's why you want to make the large transactions still on Ethereum mostly.
Yeah, so I think let me just give some context there, right? There's roughly, the numbers are likely slightly off, but at least of the global population of 7.3 billion, I believe north of 3.5 to 5 billion people earn less than $5 a day. So
Mm,
if you want to financialize the world, you cannot have it on a chain that expects you to spend $10, $20 for a single transaction. The
yeah,
counter argument is, look, dude, if somebody's earning less than $5, they're not going to be doing on-chain transfers. They're going to be trying to figure out how to pay the bills. The counter argument to that again is a large section of that user base is using Axie Infinity to make a living today. So, it's more convoluted than, hey, are we being inclusive? Are fees excluding the next big user bases? I feel there is a middle ground. And I think that's partly what Axie Infinity cracked really well is they kind of figure out that, hey, this user base exists. Can we give them an opportunity that does not exist elsewhere? And the founders made massive amounts of wealth for themselves and everybody that's vested in that doing that, right? So I feel like any conversation including fees, any conversation including B2B applications, they like you said, they need to take the macro environment into account because there's a lot of
yeah.
alpha there.
So you know that's a super fascinating stat on like you know um, basically how much money people have at their disposal, and you're not going to spend like 1 to 2 days of your budget
Absolutely.
on one transaction on a blockchain, right? That doesn't make any sense whatsoever. I think the other argument to sort of build on that is if we want billions of people in the world to use blockchains, you can't also expect them to invest in crypto as their first transaction. Probably their first transaction has to be to earn money, which is exactly what Axie Infinity allows you to do as well, right? And the play to earn
Yep.
economy. Like instead of you putting savings into Bitcoin, I mean, billions of people in the world don't have any savings at all, right? So if that's like the threshold, then we're just going to exclude billions of people from the get go. So I think like in addition to the gas fees, the other thing is like if we think of cryptocurrencies and digital assets as investments exclusively, then we're already excluding like billions of people. You have to
I
have
think
like a way to earn. There has to be like a journey into crypto, which is about earning rather than investing.
I think one comparable I have from a mental model perspective is, I'm from a small town in India. I started using Facebook when I was 12. When I joined into Facebook, it gave me this entire network that already existed. Facebook wasn't like, you know what, go bring this network of yours from the offline world to the online world before we let you give access to the rest of the network, right? I think with crypto, we tend to do the other way around. The amount of uh, friction that's involved before a user has access to a broad network is so high, it deters a lot of people. And that's why you
Mm,
have firms like MoonPay that just recently raised 555 million, right? They're
mm,
blurring the lines between what is quote unquote real life and what would eventually be metaverse, right?
mm.
They're making the two become a Venn diagram of sorts, and they're right in the middle. And I feel like firms like those would likely be great to invest into going to the next few years.
So last thing I wanted to look at briefly is the ETH tracker. And so I'm curious, I guess this is kind of similar to the stablecoin master dashboard in the sense that you have exchange flow here as well. You have a few other metrics, top transactions, top volume addresses. What are some of the things that you've been looking at for the ETH tracker dashboard? How has that been useful to you?
So I keep going to the top ETH balances address. So it's
Mm,
you go way below.
I guess that's this guy here, right? The 15. Yeah.
Yes. Yes, and I keep right clicking and tracking any of the wallets that have immediate behavioral change. So, for
Mm,
instance, someone like Justin Sun could likely be selling OTC, or I could track someone like the ETH billionaire guy going to stake his assets on ETH. I think that kind of behavior gives me a broad idea of how people actually perceive ETH, as a store of value. Uh,
mm,
it's not something I keep going to every day, at least once a week
mm,
or so. I just skim through it, try to understand what's going on chain. But this and the stablecoin data set it more or less gives you color on the seasonality of the market, right? So the way I see it is you need to break down data into a 3 month time frame, a 1 month time frame, a 1 week time frame, and a daily time frame. Like this is
mm,
broadly how I break down Nansen's data sets.
mm.
And so this data set I check like once a week or so.
Cool. Amazing. We're a little bit over time already, so I think we'll wrap up there. But thank you so much, Joel, for joining us. What's the best way for people to follow you on social media, etc.?
Oh, there's two ways you can do it. One is my Twitter. Just follow me there. I post research and a lot of trash talk, so I tend to keep it balanced. But if there's anything, just Twitter DM me. I respond to DMs faster than emails, so DM is the way to go. Separately, the blog that I run has a Telegram group. It has about 700 people there. It's all fund managers, analysts, associates, and founders in there. So try to keep it high alpha. You can just come and hang out there. That's how I do.
Cool. So we'll drop in the comments both the Twitter handle and the link to that as well.
Sure.
Amazing. So yeah, thank you so much, Joel, and thanks for being on the Nansen journey as the #1 customer, literally the first person to buy a subscription. I remember it very vividly. So I really appreciate you having been on this journey from the very beginning.
Thanks,
Um,
Alex.
yeah, so that's a wrap for today. If you like this video, then please give it a thumbs up and share it with all your friends. Remember to subscribe to our channel, turn on the notifications so you won't miss any of our alpha leaks. With that, thank you very much, and we will see you next week. Bye bye.